Mark Johnson, Johnson Financial Solutions, commercial finance broker based here in the Northwest, and I'd just like to take the opportunity, Shane, to welcome you to the Northwest today. Well, maybe start by you giving us a brief introduction of yourself and your role within Ortus.
Okay, thank you, Mark, and it's always great to be up this part of the world and great to catch up with yourself. I'm based in the Belfast office of Ortus, and I'm responsible for commercial lending throughout the region of Northern Ireland for Ortus. Just by way of sort of background on Ortus Secured Finance themselves, we're a commercial lender. We've been active for the best part of 10 years throughout the UK. We have offices in London, Manchester, Glasgow, and Belfast, the most recent office opening. So we have a fairly extensive reach. We deal in short-term finance, which is bridging finance as is also known. All commercial type assets, the sort of asset class you're dealing in, it's quite broad. We deal in everything from buy-to-lets to development exit finance, residential development exit finance. We deal in all types of hospitality, so restaurants, hotels, pubs, guest houses. We deal in all types of commercial investment. Industrial investment's been very busy of late. Also deal in office and retail, although those are challenging sectors at the moment and have been for some time. And we deal in owner-occupied property, all again across all of the commercial spectrum. The short-term finance, it's 3 years or less, and typically it's there to serve a very specific purpose. It's not, borrowers just don't sort of live in the bridging space for their entire sort of funding career, if you like. They come in, they borrow off a bridger for a specific purpose, and they go back out again. Very often back to their primary lender or their traditional or mainstream bank. So that's a little bit of a background on Ortus. In terms of Northern Ireland and what we do here, it's pretty much the types of asset classes that we talked about. There are quite a number of scenarios in which we would lend here in Northern Ireland. What we find is there's 2 or 3 that we're particularly active in. The first would be where there's a need for a quick transaction. Now, that may be that somebody just needs a quick equity release to invest in a particular property, or it could be to invest in other business activities that don't form part of our security package. That's fine with us. It could be a quick acquisition through an auction purchase, or even private treaty where the existing funders or the proposed funders aren't ready to go. We've structured ourselves in terms of approval and underwrite in a way that allows us to move very, very quickly. And typically we would expect to complete on most transactions within 4 to 6 weeks from introduction from somebody like yourself. The other sort of scenarios where we are very active is where there's an asset management requirement. So somebody may buy an empty property with a plan to set up a business in it. Very often their own bankers aren't ready to take it on. They want to see a period of trade. Our loan structure allows that flexibility to set up trade, establish a couple of years accounts, take it off to the lender after that. It could be an investment asset with short lease terms. Again, we would allow the opportunity to re-gear leases or re-let to a new tenant. We have a lot of very experienced property people within the organisation, so we'd like to think that whilst every situation like that won't be suitable for us, we do have the wherewithal to understand the true risk in a property transaction and satisfy ourselves and find a level that we can lend at that allows the transaction to conclude, and hopefully in a couple of years' time they're ready to move on to a bank on a 15-year term or whatever it might be. The other scenario where we find ourselves very active, and I suppose particularly so in Northern Ireland because we came out of the global financial crash and a lot of the banks locally were cleaning up sort of legacy loan books, is recovery. When I talk about recovery, it's really those sorts of clients where they've just fallen the wrong side of a credit policy in terms of debt servicing or loan to value, or some other aspect of their existing lending. Still good customers. No question of dishonesty or no question on integrity at all, but they've just fallen foul of their own bank's policies. Very often it's an opportunity for them to come out of that environment, maybe sell off a few things, maybe again asset manage, but return to the mainstream sector in a couple of years' time in much better shape, and again able to sort of term it out over a 5 or 10 year term, whatever it might be, wants to go through that process. Now, with all of those types of scenarios, and there's lots of other examples, but those are the three sort of key examples for me. With all of them, our delivery route to market is very important as well, and that's where we rely very heavily on a trusted network of introducers. And for up this part of the world, Mark, obviously we've been up to you a good few times, and we're always delighted to hear from you. And having introducers able to come to us with well structured deals, know the customers, can give us a bit more of a background on them. I mean, we can't do business without that sort of a thing. So that's very important to us. I mean, I don't know how you would feel about that yourself.
Yeah, I mean, our experience with Ortus has been very positive, and any interactions we've had, for me, the primary thing has been the expertise and the professionalism of the people. And generally, the process for us is we have a conversation, 5 or 10 minutes. We get an indication of something worth looking at. We put a paper together, and potentially we get an agreement in principle the next day or the day after. The main thing gives me confidence is all the areas you talked about. There's expertise in all those different areas of property, and the restructuring thing is something we've run through a couple of times or a few times now, and it gives people that bit of breathing space to go get a temporary solution and work it into their longer term plan, work their way back to their mainstream funder again.
What you're saying is a very good point as well, Mark. We actually we've quite a number of ex-bankers work within Ortus, all from a real estate background. So generally what you find, I mean, I'm in the market almost 30 years now. Most scenarios we'll have encountered before at some stage in our career. So we like to think we add value. We like to think we can come up with creative solutions. But we can only do that when there is a decent quality of information flow coming from the borrower and coming from the introducer. So I think that's very important to reinforce. In terms of our process and in terms of what we look for, obviously you've talked about the production of the term sheet. I mean, our ambition is to have that out within 24 hours with good quality information. We could be in legals by the end of the same week if terms were agreeable. I think a couple of things we would look out for at that stage would be, quality solicitors acting on all sides, all parties keen to do a good job for the borrower. We manage our own professional team very closely to ensure that happens. We would expect a valuation to be in within 2 to 3 weeks. We tend to use all of the local commercial agents, so turnaround time should be okay. And 2 to 3 weeks after, we would expect to see final stages of security and legal documentation coming together. Now there are always delays. For unforeseen events, but that's what we aim to achieve whenever we set out on a process. And when we're dealing with recovery, sometimes you have clients that are maybe feeling a bit of stress. They're maybe coming under a little bit of pressure from their existing bankers. We don't need to add to that stress and pressure. We need to make it as easy as possible for them and as quick as possible for them. So I think that's, from our perspective, that's very important in how we deliver our business.
And that for me is one of the key roles of the broker in all this, is finding that clear definition of what is the scenario, what is the problem, and what is the client trying to achieve, and helping you as the lender understand that as quickly as possible to put the solution in behind it to get to where we want to get to.
Absolutely, and the broker, and Mark, you've been very, very good with this. The broker doesn't just hand the deal over and put the feet up. You know, we're on the phone all the time. We rely very heavily on you and people in your role to ensure that all parties are working hard to deliver a completion. So I suspect we'll talk to you more than we will the borrower or anybody else in the process. But it makes our life a lot easier. And hopefully it makes the client's life a lot easier. So you certainly do, you earn your wage on them.
Well, I like to think I try and keep that stress away from the client as much
Yeah,
as we can.
yeah, yeah.
So briefly, Shane, for those people that maybe aren't familiar with the term bridging finance, what does that mean?
Yeah, I think it's a very good question, and particularly for Northern Ireland, because bridging finance is a very common form of finance in GB, and we possibly have. I mean, I'd a guess we have tens of direct competitors in the market in GB. Put very simply, bridging finance is just short-term finance. Now, where the approach differs to the likes of a bank who's providing a 5 or a 10-year transaction, we will look at asset cover because we are a property secured lender. We will always look at asset cover and we will look at debt servicing cover. But probably one of the most important conversations for us is what is our exit? Because we're not going to amortise over 10 or 15 years. We need a very clear understanding of what your plan A is and what your plan B is. So plan A could well be, I'm doing 2 or 3 things to this asset and then I'm going to refinance. It may be that it's going to be sale. It could be repayment from sale of an asset which is not part of our security, or it could be just lump sum repayments from cash flow. But it is, in the underwrite stage, a big part of our conversation is, look, what is the risk of this exit not happening? And clearly, when we get into more volatile economic environments, that becomes a more difficult conversation because it's harder to predict perhaps where the bank's appetite will be in 12 or 18 months' time. But we've been doing this for 10 years. We've seen difficult times before, and we understand how that impacts on our exits. And in some respects, we actually thrive in more volatile times because when banks step back from the market a little bit, it creates more space for the alternative sector, and bridgers are a big part of that.
So we obviously work with a panel of lenders, and within the bridging format, we have a number of bridging lenders there. But what makes Ortus different, and I suppose what makes them particularly different within Northern Ireland?
Okay. Well, look, I think what makes Ortus different in Northern Ireland, it's the same throughout the UK, and for me, it's their people, and that impacts on the business in lots of areas. I think we try to be accessible at all times, and when we talk about all times, it means if Mark Johnson makes a phone call at 5 to 5 on a Friday, I'm not looking at it and going, I don't want a deal from Mark this evening. I'll wait till Monday or Tuesday. Our team are, they're all motivated to get that transaction off you and keep you happy with our performance. I think we also try not to be too well defined in the type of asset or the type of transaction that we like to pursue, because I want you to phone me and tell me whatever you know, so that I can be as creative as I can in terms of producing a term sheet that works for you. And again, it's spotting the things that maybe you don't spot. Through our experience, knowing, look, this works or it doesn't work. Making suggestions, asking questions. And that's all down to our people. Knowing what they're doing, respecting the fact that you have a role to play for your client, and making sure that we service you to the best of our ability. Now, lots of lenders will try and do that just the same as we do. We think we're very good at it. We think we're best in class at it. But we can't just sort of sit back and congratulate ourselves on that. It's, we need to do this on the next deal and the next deal, and just keep going.
I have to say, for me, one big thing is that certainly that relationship piece. And the fact you now have an underwriting function based in Belfast, it very much gives you a local relationship there. And I suppose the trust and the credibility that can be established with that, for me, works very effectively.
Oh, absolutely. I mean, we have a very good team in Belfast. We've been very fortunate in the people we've been able to recruit. Um, you take Daniel, who worked on a case for you recently. I mean, he's sitting working on 20 cases today, and that covers a very wide range of assets. He's learning from that all the time. So I'd like to think, you'll have something for us hopefully next week, Mark, which, some of the issues that come up on that he'll have dealt with before, and he's learning all the time. And we're all learning all the time. And whatever knowledge we have within the organisation, we share, and we happily share amongst each other. So that, for me, that is, the people and the quality of people we have. Without that, we become the same as everybody else. And there's lots of lenders out there that, they'll make money available, and due course they'll draw it down. We have to improve upon that, and just, be quick, be helpful, be accessible, and offer solutions wherever we can.
Okay, so we're certainly in challenging times, shall we say, at the moment. Personally, my view is, for you and your business, take the time to work out what's happening and plan and focus on what you can control. Don't get too distracted by everything that's going on around you. There'll still be opportunities there for people. Likely, finance with banks might get more difficult in the short term. What's the outlook for the bridging and the alternative funding sector?
I think it's a very good question, Mark, and from our perspective, I mean, our view on the alternative sector and the prospects for the alternative sector over the next sort of 12 to 18 months is that it's quite positive. And I say that in the context of how we actually ended up in Northern Ireland in the first place. I mean, we started lending in Northern Ireland in 2014, and that was on a backdrop of banks not really in the market. And that's not just Ortus Secured Finance. I mean, we had 3 or 4 other competitors came into Northern Ireland. There's 1 or 2 of them set up offices in Northern Ireland, and that was a vacuum that had been created by the absence of activity within the traditional banking sector. I think if anything, an economic downturn and I suppose more concerns over the longer term might prompt a similar reaction from the banks. Now, I would qualify that by saying I think the banks are in good shape financially, which we didn't have after the global financial crash. But I think they tend to have less appetite to lend. I think that they apply their credit policy much more rigidly in periods where the market's a little bit tighter, and that creates opportunity for alternative lenders. In terms of the risk profile and how concerned we would be about the risk profile of our transactions, you've got to keep in mind, because it's short term, we're talking 12, 18 months. If a transaction deteriorates significantly during that period, then we have to take a very serious look at our underwrite at the start of the process, because it's not a long period of time. If we look at the financial crash, a lot of the transactions that banks lost money on, they had on their books for 5, 6, 7 years. Something on the books for 12 months, at the sort of loan to values that we lend at, I'd be very disappointed if we got it badly wrong. And I would say that would be a similar situation with a lot of the alternative lenders that are active here in Northern Ireland. And I suppose within all of that, it's important to also back the right people. And it's a good opportunity for us to pick up some top quality customers that when the market's going well and everybody's lending, we maybe wouldn't get the same opportunity. I'm sure you would see it as well, Mark, where you will have customers coming to you that in perfectly normal times probably would just walk down the street to their local business centre manager, and you'd never hear from them.
Yeah, and I mean, you mentioned there, it goes back to the financial crisis going back to 2008, I suppose. There's an awful shift in the marketplace since then, and particularly in Northern Ireland, we were all focused on our main banks. That would have been our finance option, really. I think there's been a big cultural change in that type of thinking. Also think the best people in business are also always going to find the opportunities here. And SMEs in particular can be very robust, determined and agile. And there will be people that take the opportunities in this, whatever's coming ahead. And the alternative funders will have a big role to play in supporting those people. Just for the people watching that maybe aren't familiar with bridging finance, could you give us a couple of examples of the type of deal you maybe might put together?
Okay. Well, look, I suppose probably before we get into specifics of deals, it'd be useful to sort of set out the general parameters of our transactions. Our loan, our target loan size is anything from 100,000 up to, we would talk about 25 million, but in Northern Ireland here we're probably 10 to 12 million. The maximum term we will do is 3 years. Our average term across the book's probably more like 18 months. Loan to value wise, it's really down to, I suppose, finding a level of risk we're happy with. But typically we could be anything between 45 and 60% loan to value. For the right transaction, there may be a bit more in it, but that's generally where we target. And pricing, well, that's pricing on application. I think, Mark, it depends on the risk profile of the transaction. It depends on the nature of the asset that we lend into. So the likes of residential investment, would be pretty keen, and I'd like to think would be competitive in our marketplace, as we are in all asset classes. But something that we would perceive to be higher risk, obviously, would be priced accordingly.
Yeah, I know, for example, we've had a few startup scenarios that you've approved for us.
Yeah.
And you'll take that on a case-by-case basis?
Case-by-case basis. We're happy to look at transactions like that. I think where we look at assets and borrowers who are looking to trade, I think the background and the ability of the borrower becomes very, very important to us. Obviously, if you're buying a dry investment in the centre of Belfast, the quality of the borrower becomes less important because you have an asset there that you could sell in the morning. When we're in startup, we rely very heavily on the client to get the business to a point where our exit is deliverable. Now, within that, we're still lending on property, and I suppose we get ourselves comfortable with the transaction on the basis that, even if things don't go fully to plan, our loan is underwritten by a good quality asset in the right location for that particular activity.
So Shane, obviously people can go directly to Ortus to apply for finance if they want. From my point of view, I would suggest as a broker that they understand that's where they should be going first. What's your view?
I think, look, we are a broker-led business. That's not to say we don't get direct inquiries, but the broker is a huge part of our delivery platform. So we've no issue dealing with them. We encourage it, and we actually work very hard to protect the role of the broker within the relationship with Ortus. And I think there's a couple of things, that there's a few reasons for the importance of a broker in all of that. I think there's a better chance of us getting the right information early in the process, because sometimes, on occasions, you will find that we find out we find information on the borrower or the property or some aspect of the transaction very late on. It causes a lot of problems. So front-ending all of that information allows us to make informed decisions at the outset. Having the broker very heavily involved throughout the process is hugely helpful to us as well, because on occasions we do have we have professional teams that maybe are pulling in different directions. So bringing in I suppose some straight talking into the whole process ensures that we move as quickly as we can. And I think the role of the broker, particularly for those, we talked earlier on about the transactions that need to happen quickly. I think without a broker, there is a much lower probability of that happening. And from our perspective, you know, we've got to protect that wherever we can.
Shane, I just want to finish by thanking you for taking the time to come to the Northwest today, and I hope people have found it beneficial and maybe explained a bit more about bridging finance and how it works. I know I've definitely found it useful.
And look, I'm always delighted to come up, Mark. We've seen some great work coming in from you. There's always more to do up here. It's a great city. It's a busy city, and I think we're only really starting up here.